facts from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you're having a wonderful weekend. Today, we need to talk about why everybody is lying about real estate. Everywhere I look, I keep hearing real estate bubble. Yes, you are seeing the prices go up. You're hearing about all these bidding wars, but there's a lot of doom and gloom around it. You've just seen Bitcoin go down. You've seen what's happened with tech stocks, but a lot of people are saying, hey, real estate, this is a bubble. It's unsustainable. Wait till the forbearances come. They're talking about commercial real estate dropping, all of this stuff, but I would rather let history be a teacher. And if you guys watched last weekend's video about inflation and what happened since the 70s, you will notice a very specific trend here with real estate. And why I'm bringing this up, because we are going through the same thing here today, and I don't want people to miss out on these opportunities. Now, I'm not saying go and overbid on everything. Obviously, you have to do your research, and even with the conclusion of this video I'm going to give you, the biggest thing to understand here is that you really notice the effects in about 5 to 10 year periods. So, real estate is a long-term investment. Yes, there is an opportunity to flip. I will probably even make another video here because I'm going to go look at some flip properties today, and I want to see if I could show you it, but I wanted to get this out here first. But as long as you put yourself in a position to hold property for 5 to 10 years, you will be very, very good. Even around, I think, 2007 or 2000, they said it, real estate is a escalator to wealth. I mean, this is a good thing to be getting here, especially when you see what's going on. So I want to make sure you guys know what's going on, but I really want you to see what happened in the real estate market before and the similarities we're seeing here today. The number one thing I want to get right off the bat here is pricing in. This is the phenomena that you hear about a lot. When you see the price of something go up and then you kind of find the reason, you're like, oh yeah, okay, this is going to be a good investment because of this reason. Where this really happens in the stock market is Christmas. This is like the Santa Claus rally. So pretty much everybody, when they first get into stocks, they're like, oh yeah, well, companies are going to sell a lot on Christmas because people buy gifts. That's the logic. That's the idea. And then people use that to buy this stock. Now, what the unsophisticated investor is usually not aware of is that they're not the only person who believes that. And really what tends to happen in the stock market, the people getting ready for Christmas and New Year's, they started buying the stock in September and October, pricing that in. So if you want to buy it a week before Christmas, 2 weeks before Christmas, chances are it's priced in. Now, that is what's happening with real estate. What I'm trying to say with this is that I am not the only person who's known this and has known this. If you see what's going on, a lot of people are buying real estate for a reason. So when you see these bidding wars and you see people willing to pay this much for houses, you really have to ask yourself why. The point is, most people are seeing what's going on and they're willing to pay this because they're pricing something in. Now, in that same logic, this is also what you got to be careful of when it comes to buying real estate or looking at it, because you don't want that future gains priced in too high. However, like I said, if you're planning to hold this house for even beyond 1 or 2 years, you will see why that's not really the case. And this is why I'm trying to say here, it seems like a lot of people are talking down on real estate and all of this, but a lot of the underlying factors are all pointing to real estate being very, very good in the next 10, 15 years without any stopping in between. So do not be fooled when you are seeing a massive amount of activity and you're seeing people paying a certain price for these properties. They're doing it for a reason. And now on top of all of this, you have a unique situation with real estate at this time that we did not see at the other time in history. And this has to do with a supply crisis. There is not enough homes available. So yes, I am looking at this for the 5 and 10 year with real estate. I do think that people are pricing in stuff right now, and it's not all the way priced in. Some may be priced in. However, I think everybody is lying about real estate when they start saying it's going to crash and all this, because when you look at the situation, it's not going to be that the forbearances come back or a bunch of foreclosures and then now, oh man, people are worried. It's because right now there are just not enough homes available. So you can see here, this is just the number of homes for sale since 2019. You're watching all of these crazy price moves, but you'll notice this is down over 50% already. So this is the main point here, because of a lot of people say, oh, well, we could be in a real estate bubble. And that may be true. In 2008, you had over leveraging, you had all of this. It's a lot harder to qualify today. However, I could see how people might argue that, but now the real big part is there is just simply not enough houses. The supply and demand, you could double the amount of houses available, and that would bring you just to how many houses we had in 2019 or 2018. The point is, you cannot really have a bubble until you get this supply out of the way. What happened in 08, a lot of builders, everyone kept seeing, okay, yeah, real estate looks looks good. So they kept building and building and building. And eventually the supply was able to outweigh the demand. So fast forward about 10, 13 years later, you can see now prices have gone back up to those '08 levels and higher. But the difference is they cannot build as fast. Really, right now, you have to get through about, I think, 1.3 million houses currently. That's all the homes that you have available. But essentially, the demand is way higher than that. So until the supply is able to meet it, and now with all the prices of wood, supply chains, all that, it's going to take about 2 or 3 years just to get there. And then we might be able to start talking about a real estate bubble. But right now, there's just simply not enough houses available for there to be a bubble of something. It's not as if people are paying wild valuations and prices for something there's an abundance of. That's what was pretty much happening back in the day. The last real estate bubble, you had people spending way higher than the average price in these little areas that really weren't worth it. And there was supply everywhere, and then that's what eventually led to everything getting collapsed, and then it took a while to rebound. The difference is now you have people paying high prices for something there is a low supply of. So these are all of the little reasons that I want you to keep in mind, but here's just the main point. This is the chart that we started with. If you watch the video I posted, it had to do with an era that oftentimes gets ignored, and that is the 1970s, and this was called the Great Inflation. And now why I brought that up last week, we were talking about stocks, we were talking about even policy and what everything's looking like, and that is because what you're seeing today mirrors that exactly the same way. And finally, what you heard about 2-3 weeks ago, if you heard the CPI, if you watched the news, that was one of your first CPI increases since 2007, the biggest core increase since 1987. So we talked about inflation, prices rising, and then again, understanding that what happened back then is essentially happening now, or you could even argue you're doing it at a way bigger scale today, but you have to see what happened to real estate prices. I'll even explain to you why I got here, but take a look at 1963 through 1969. You saw slight increases. Houses were really cheap. This is not inflation adjusted. I think you could like double it up. It would be like $100,000 or something. I have a little bit more data I'll show you, and you'll be able to see the conversion. But I also brought this up. If you remember, like, this is why people were able to buy houses cheap in like the 70s, and then you look back, you're like, wow, that was really cheap. But what do you notice happens after 1970? You really just start to see the median price skyrocket. Now, the green line is the average, the purple is median. So the average does reflect some of the more outliers or higher priced areas. This is just the median home price, which does very well lag certain areas. In less popular areas, even today, you could get well below the median price. In some places like California, you're going to be well above the median price. So average has an interesting factor there, but this is what you got to see. From 1970 to 1980, you saw some of the biggest real estate prices. I will go over some of the data with you, and I have even California real estate from the 60s all the way down to 80s, but like I'm saying here, you're seeing 4% gain in the 69, 1% in 1970. And then right after all of these inflationary policies back then, that's where you start to see real estate go crazy, and it starts to look like exactly what you're seeing. You start to get a 9% year, then a 7% year, then 9.2, then 10, then 20, then 16, then 28. We saw about 30%. So I think we're around like right here because we got that last year. But notice from 1970 to 1980, that 10-year period, you just started to get some of the most biggest and wildest real estate jumps out there. So I really hope you watch my video last week about why inflation can have an effect on the market here, but hopefully you see all of this information. It applies to stocks, real estates, crypto, whatever you want. But I am a big real estate investor and I love real estate, so this stuck out to me. But let me even show you a little bit more here, because a lot of people oftentimes are saying, well, if the market crashes, real estate's going to crash. And the usual example I like to go back to is the dot-com bubble, because a lot of people are like, wait a minute, if stocks crash, it brings everything down. No, this is why people like real estate. What you saw in 2008, that was a unique situation caused by the over-leverage, lack of oversight, and practically just fraud mixed with people just profiting off of it. But if you come here leading into the dot-com bubble, you can see 1997, 5% increase, 1998, 7%, 1999, okay, market's getting heated up, so real estate's coming with it, 2000, 11%, but now by 2001, 2, and 3, the market is damn crashed because of the tech bubble. You could go look at it, even 04, that's when things start to pick up, but all you see happen is real estate start to keep shooting up. So this is why I'm saying, please look at the data and look at history. Stop letting people lie to you about what is going on with real estate. Again, I could be wrong myself, but I like to look at history and I encourage you to do the same thing. So coming back to the chart here, you can kind of see what I'm saying here now. From the 1970s and that first wave of policy, inflation, and highly inflationary policies not seen in the 30, 40 years prior, that's what's happening here today in 2021. We have not seen inflation like this since the 70s or 80s, and then the policies do reflect very well. This was the result on real estate. So now here's the timeline of the United States housing bubble. So I don't know if bubble has a negative connotation, but hopefully you can see what's going on here. But there is a lot of unique factors that did happen. But if you've been paying attention, if you've been following along, this will definitely make the most sense to you. And a lot of people think Freddie and Fannie all had to do with 2008, but no, man, it starts in 1970. Federal Home Loan Mortgage Corporation, Freddie Mac, is chartered by an act of Congress as a GSE to buy mortgages on the secondary market, pool them, sell them as mortgage-backed securities to investors on the open market. Compare that even today. Regardless of what Freddie and Fannie are doing, you now have the Fed, and this is why Jerome Powell brings up supporting the real estate market. Or a lot of people say, wait, why are they buying $40 billion a month of mortgages? This is something that the government has actually done for a while. So that's one reason why I always like real estate. You have that support from the government and just the overall market that you're in. The average cost of a new home in 1970 is $26,000, $167,000 in 2017 dollars. From 1960 to 1970, this is my favorite part, inflation rose from 1.4 to 6.5, a 5.1% increase. I believe you're at a 2 or 3% increase right now, or 4%, while the CPI index rose from 85 points in 1960 to about 120 points in 1970, but the median price of a house nearly doubled from $1,650 in 1960 to $26,000 in 1970. In 1970, the median price was $22,000 to $25,000. So that's just from the 60s to 70s. And like the chart and all the data shows you, even from there, it went crazy. But this is one of the biggest factors. One of the first moments you saw big CPI increases back then because of all of those policies. Inflation was a small 3-4% run up, but that led to a doubling of house prices. So this is where it gets better, because this is all of the stuff I've been saying. You're going to see a lot of stuff and there will be ups and downs, but you really have to have a 5-10 year plan and being able to hold, because that's where you see stuff. When all of this money gets pumped out and you see all of these things happening, pricing in, it is for the future. So you have to keep that in mind. But now look what happens. You got to double from the 60s to the 70s. But now all of these prices start coming in. Again, the prices have already doubled by 1970. Fast forward to 1975 now, the median house price jumps to $37,200, while the average starts to really go higher here. Why? Because this is starting to reflect now the certain areas that are doing a little better or worse. So bring this up on the calculator here. $37,200. That's the median price in 1975 minus $22,100 in 1970. That is a $15,000 difference, but now divide that by the $22,100 that you started from. That means you almost went up another 70% in that 5-year period after doubling when it started. And then now 5 years later, the median price keeps going up, almost up another 60-70%. The average really starts to diverge now, because this is where you start seeing certain areas grow a lot faster or slower. And then by the end of the year, that year you were up about another 20 or 30% on real estate. So that is your 10-year period from 1970s and everything else. And this is where you could kind of visualize it. And then really once you get to 1980s, it still keeps going. So the only time you really saw a big decline was 07 and 09. And you could see it was a little blip. We've came here. This chart only ends at 2016. But the point here isn't to show you really about real estate. I've always liked real estate. But the real point is the policy and what is happening right now with inflation and all of this stuff. It is no coincidence that you are seeing a lot of the same key factors from 1970, and that was a shifting point in real estate. And that's why I'm saying here, if you're aiming in the long term, this is a good opportunity, and I'm sick of people lying about it. There is people gobbling up houses right now, left and right. Yes, there's always going to be risk, and yes, some of you are like, well, I can't qualify this and that. I talked to this person, they said no. Quite frankly, I wouldn't let anybody tell me no right now, and I would find an answer. You can wait. Obviously, be smart. Don't be hasty. Don't FOMO into it. But what I'm trying to say here, at least in the next 5 years, And if you want to make a long-term investing plan, you better have real estate in there because houses are not going to be getting any cheaper. You may overpay and it may take a year or two to get up there, but like you can see here, the trend is most likely going to continue. And if they're telling you can't get a house now, you're probably going to see everybody buy up houses for the next 5 years, and then they'll make it a little bit more accessible. But if you've seen our streams and you've seen what we've talked about, there's opportunities to get it. So I rebuke any doubt or anybody saying if you think you can't do it. I know not everybody is in the best financial position. However, if you make this a goal and you seek out the sources, there's people willing to help, and this is an opportunity to do a lot of damage in here. But you could also see the relative safety in it. You could damn live in this house. This is not being an investment where you cannot utilize it. If it goes down, you got to sell it. It's not Bitcoin. So I hope you guys see the uniqueness of this situation that we're living in. You got the policy, you got the supply crisis. Rates are even at a historical all-time low. You should see the rates during these times. But quite frankly, I think this is one of the best opportunities in the next decade. And I really just, I get so surprised. And like I've said, I don't know why everybody started talking about stocks and crypto. And yes, this is a stock channel. Yes, I have crypto and all of that. But I've seen some of the biggest real estate people all say, no, 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 no. And they don't really talk about this. And people aren't really looking at history and making these connections. But I feel like any savvy real estate investor or anybody with a lot of history in this market, they will understand this. So I hope you guys see it. Again, I encourage you to look this up yourself. If you have any questions, let me know. If you ever need any assistance, we have a full real estate team. Reach out through email, tradingfraternity@gmail.com or corealestate@gmail.com. But at the end of the day, we're not doing this for a commission or anything. You don't need to rely on us. Just go ask around and go get what you need to do. You can always send us property. We'll give you our feedback on it, anything of that nature. But I hope you guys are putting this in your plans, and I hope you really see what's going on. Do not get caught up in the noise, baby. The cult loves you. I will see you tomorrow, and I will see you on stream, baby. Let's go.